All right, everybody, welcome back to Talk Tickers.
Yeah.
We are going to be doing a deep dive today into Phillips 66's Q4 2024 earnings call. And there's quite a bit to unpack here.
Yeah, definitely. There are a lot of moving pieces with this one, for sure.
Yeah.
Like, we've got...
Yeah, it's not a simple story.
No, it's not.
And I think that probably makes it pretty interesting.
Absolutely.
So I guess maybe the best place to start would be with just a quick overview of their results for the quarter.
Right.
I mean, they reported an adjusted loss of $61 million or 0.15 per share.
Yeah, and that was a bit of a surprise to some people.
It was.
Analysts were expecting them to be profitable.
They were.
But when you dig into the numbers a little bit, it starts to make a little more sense. A significant contributor to that loss was a $230 million pre-tax charge related to accelerated depreciation.
Yeah, accelerated depreciation on their Los Angeles refinery.
That's exactly. Which is slated to be shut down at the end of 2025.
Right.
So that's, it's a big accounting adjustment.
It was like 43 cents a share or something like that.
Right. Yeah, $0.43 per share impact.
Yeah.
So, if you back that out,
right,
they actually would have been profitable.
Right. So it's almost like a non-recurring item in a sense.
Yeah, you can kind of think of it that way.
Even though it's not like a one-time Yeah,
it's not like an asset sale, or it's not like a one-time gain or loss.
Right.
It's more of an accounting treatment.
Right.
Related to that. That
upcoming
closure.
Right.
But
yeah, I mean, it's interesting because it kind of shows how they're kind of starting to
they're
position themselves,
thinking ahead.
Yeah, they're thinking ahead. To that eventual closure.
Absolutely. And, that's one of the themes that we saw throughout this earnings call is that they're really focused on the future.
Yeah.
And making some strategic moves to position themselves for, what they see as the future of energy.
Yeah. And I think the biggest, the most obvious example of that is their move into midstream.
Right. Their midstream business, which has been growing rapidly, both through organic projects and acquisitions.
Yeah.
And the most recent example of that, of course, is their acquisition of Epic NGL.
Right.
Which is a
pipeline system.
A pipeline system that
expands their presence in the Permian basin.
Yeah. Expands their footprint in the Permian basin significantly, which is one of the most prolific oil and gas producing regions in the country.
Right.
And this acquisition,
it basically doubles their midstream.
Pretty much doubles their midstream EBITDA.
EBITDA, right.
Yeah, which is it's earnings before interest, taxes, depreciation, and amortization.
Right. So it's basically like
it's a measure of their operating cash flow from the midstream business.
Right. So, it's
and that's a big deal because it shows just how committed they are
to this segment,
to the midstream segment.
Yeah. And it's
and it's interesting because
it's a big move.
It is a big move
because it's
especially considering the current narrative around the energy transition and the move away from fossil fuels.
Right.
You've got a lot of companies that are divesting their oil and gas assets, focusing on renewables.
Yeah, and Phillips 66 is
kind of going the other way.
They're doubling down on
they're doubling down on
oil and gas,
on traditional energy.
Yeah.
And it's a bold move.
It's a bold move.
For sure.
And it raises some questions about their long-term strategy.
Absolutely.
Are they betting against...
Making a bet against the energy transition.
Yeah, are they betting that oil and gas is going to...
They're positioning themselves.
Be around for a lot longer than...
To be a major player.
A lot of people think.
In a future where oil and gas is still a significant part of the energy mix.
Right.
I think that's the...
Yeah, I think that's the
question that a lot of investors are asking.
Yeah, that's the big question, right? Like what is their long-term vision here?
Long-term vision. And
I think it's too early to say for sure.
Yeah, I don't think anybody really knows the answer to that question. It's definitely something to watch.
Yeah. But it's something to watch for sure.
Sure.
I mean, they're clearly making a big bet on it.
They are.
And it's going to be interesting to see how it plays out.
Absolutely.
Yeah. Now, obviously the midstream business is a big part of this story, but they're also still a major player in refining.
Right.
And they actually had a pretty strong quarter in refining.
They had a really good quarter operationally.
Operationally, yeah.
even though the industry is facing some headwinds,
Right.
They managed to deliver
record clean product yields.
record clean product yields
in Q4.
in Q4.
For the full year.
Yeah, and for the full year of 2024.
2024.
Which is that's a testament to their efficiency.
Right.
They're really good at what they do.
Yeah. And they've also been...
They're getting better.
Yeah, they're getting better. And they've also been really good at
squeezing...
cutting costs.
At squeezing out costs.
Yeah. So like they've achieved a $1...
Yeah, they achieved a $1 per barrel reduction in refining costs.
Per barrel reduction in costs.
Which is
huge.
Which is significant.
Yeah.
Especially in this environment. Where margins are tight.
Yeah. So, it's...
So it shows that they're not just
resting on their laurel.
They're not just riding the wave.
No.
They're actually taking steps to
actively trying to
improve their operation.
Adapt and streamline.
Yeah.
And become more efficient.
Yeah.
Yeah.
So
that's encouraging.
It is encouraging. Yeah. I mean, it shows that they're not just like the long term.
They're not just like
they're not afraid to make tough decisions.
Right.
Shutting down that refinery in Los Angeles.
Right.
That's a big decision.
That's going to impact a lot of people.
Yeah.
But
it's a decision that they felt was necessary.
It's a decision that they felt was necessary for the long-term health of it. It's encouraging to see that they're...
It's encouraging to see that they're being proactive.
And taking the steps that they need to take.
The necessary steps to position themselves for the future.
Yeah, and I think that's really...
And I think that's kind of the overarching theme of...
Yeah, the overarching theme here is that
this earnings call is that...
they're making some big bets on the future.
They're thinking about the future.
Yeah.
And they're not afraid to...
And they're not... afraid to make bold moves.
Yeah.
Yeah.
So it'll be interesting to see how it all plays out.
It will be interesting to see how it plays out.
Yeah.
All right. Well, let's take a quick break, and then when we come back, we'll dive a little deeper into some of the specifics of their strategic priorities.
Sounds good.
So they've laid out these strategic priorities for 2025 to 2027.
Right.
And a big part of that is returning value to shareholders. And they've committed to returning over 50%.
Yeah, over 50% of their operating cash flow.
Of their operating cash flow to shareholders.
To shareholders through dividends and share repurchases.
Right.
So
and
that's a pretty clear signal.
Clear signal, yeah.
That they're,
that they're
prioritizing rewarding their investors.
Yeah.
Which,
in this environment.
Which is what you want to see as an investor.
It's what you want to see.
Yes.
Especially with
interest rates.
Interest rates rising. Companies are having to make some tough choices.
About
how they're
going to allocate their capital.
Yeah, allocate capital. Yeah, and Phillips 66 is saying.
From 66 is saying.
We're gonna return.
We're gonna give
money to shareholders.
We're gonna give it back to our shareholders.
Yeah.
Yeah, and
Yeah.
So that's a good sign.
That's a positive sign, I think.
Yeah.
For investors.
But they're not.
But they're also.
They're not sitting back and
returning capital
and collecting dividends.
Right.
They're also
setting some.
They're setting some pretty ambitious
goals.
Operational targets
for both refining and midstream.
Yeah, for both of those businesses.
Yeah.
And
one of
the key targets.
The goals that they've set is to achieve
that they've highlighted.
An adjusted controllable cost.
Is to achieve an adjusted controllable cost of $5.50 per barrel in refining.
Right.
Which
is pretty aggressive.
Pretty ambitious goal.
Yeah. It's going to
require some significant
improvements.
Operational improvement.
Their operations.
And potentially even some divestitures.
Right.
They may have to sell off some assets.
Yeah, they may
to reach that target.
To reach that goal.
Yeah. And
it's not clear yet.
It's not clear how they're gonna get there.
But it's
something that they're
clearly focused on.
Yeah, they're clearly focused on it.
Yeah.
And I think it's
a good sign that they're
at least thinking about it. Schools. Yeah. Yeah. Now let's not forget the elephant in the room here, which is
the elephant in the room.
Debt.
Yeah, they're debt.
They've got a lot
of debt, and they're
looking to reduce that.
Yeah, they're aiming to reduce it to $17 billion.
To $17 billion.
Which is
still a lot of debt.
Still a lot of debt, but it's a
significant reduction.
Significant reduction
from where they are now.
From where they are now, yeah.
Yeah.
And they plan to achieve this through a combination of asset dispositions and operating cash flow.
So they're going to be selling some assets.
Yeah.
And they're going to be using their cash flow to pay down debt.
Yeah.
And it's a
balancing act.
It's a tough reduce debt while also
rewarding shareholders.
Reward shareholders and invest in growth.
Yeah. So,
it's tough. It's a lot of balls to keep in the air.
It's a lot of balls in the air.
Yeah. And I think
it'll be
interesting to see how they
prioritize
competing
demands.
Those different competing demands.
Yeah, for sure.
Yeah. All right. Well, we've talked about the serious covered a lot of ground here.
Yeah. Let's have a little fun now.
All right.
It's time for our
favorite segment. This is not financial advice.
All
right. Remember, everybody, this is just for fun.
Yeah.
This is pure speculation. We're just throwing out some
ideas here.
Outrageous but plausible. Trade ideas. All right. So here's the scenario.
Okay.
What if
Phillips
66's aggressive move into midstream results in a significant valuation?
Okay.
Re-rating by the market.
Interesting.
We've seen this happen.
We have seen that happen in other
energy companies
that have shifted their focus to this segment.
Right.
So what if Phillips 66 can convince the market that their midstream business
is the real deal in midstream?
Right. Yeah. Then their valuation
could see a pretty big boost.
Could see a huge boost.
Yeah.
Right.
Potentially.
Imagine if those organic growth projects in midstream.
What if those projects really take off?
Exceed expectations.
Yeah. And they start.
And Wall Street suddenly wakes up.
Generating a lot of cash flow.
And recognizes Phillips 66 as a midstream powerhouse.
When the market starts to view them as a midstream company.
The stock price.
Rather than a refining company.
Could take off.
Yeah. Their multiple could expand significantly.
Right.
Yeah.
I mean, it's not crazy to think that could happen.
It's not out of the realm of possibility.
Right.
But
I mean, we've seen it happen before, with other companies.
It's also important to remember that the energy sector
One at Phillips 66
is notoriously volatile.
Yeah, but
and investor sentiment can change very quickly.
A risky bet.
So there's no guarantee
that the market will embrace this new direction.
This is
for Phillips 66. At least not in the short term.
Sure thing by any means.
Right.
But it's fun to think about the possibility.
An interesting thought experiment.
Right.
Yeah.
It's a classic case of betting on a company's ability to...
Classic case of betting on a...
defy expectations and reshape their narrative.
Company to kind of reinvent itself.
Yeah.
Yeah, and...
and
for our listeners...
It's something to keep an eye on.
This thought experiment, I think, highlights...
Yeah, for sure.
An important point.
Absolutely.
Which is that the energy sector...
Let's remember it.
...is constantly evolving.
Not financial advice.
Right.
This is just...
Companies are repositioning themselves. And traditional assumptions.
Mid-balling ideas.
About valuations and business models.
Right.
Might not apply anymore.
Yeah.
So it's a reminder that we, as investors, need to stay informed.
Stay on top of things.
We need to be adaptable.
Yeah.
And we need to constantly...
Got to do your own research.
Reevaluate our assumptions.
Yeah, absolutely.
About companies and industries.
All right, so let's recap what we've learned today about Phillips 66.
Okay.
They reported a loss, but it was largely due to that accounting move.
Right.
Related to the
accelerated depreciation.
LA refinery closure.
On the Los Angeles refinery.
The real story here, I think, is their strategic shift towards midstream.
Their strategic shift towards midstream.
They're making
big moves.
Big moves.
To establish themselves.
To establish themselves as a major player.
It's a major player in that space.
Yeah. Yeah, and they're also serious about returning value to shareholders through dividends and buybacks.
Right.
But will it be enough to attract investors in a world that's
the big question.
Increasingly focused on sustainability. Yeah, can Phillips 66 successfully navigate this energy transition and position themselves for long-term success? You know, their move into midstream is a big bet.
It's a big gamble.
It's a big bet.
It remains to be seen whether it'll pay off.
Yeah, it's like watching a high-stakes poker game unfold.
It is.
You know, they've gone all in on midstream.
They've gone all in.
And we're all waiting to see what the next card reveals.
Yeah, and they're still a major player in the refining sector, which is, you know, an industry that's
facing significant challenges as the world shifts towards cleaner energy.
Yeah, absolutely. So the big takeaway for our listeners, I think, is this. Yeah. Phillips 66
is undergoing
a major transformation. They're betting on midstream.
Mm-hmm.
They're streamlining their refining operations.
Yeah.
They're focusing on rewarding shareholders. Yeah. But the path ahead
is uncertain.
Is very uncertain.
Yeah.
The energy transition is...
Their energy transition is reshaping the industry in some very profound ways.
In a whole new world.
It'll be fascinating to see if Phillips 66's gamble will ultimately lead to success or leave them behind.
All right, well, that's all the time we have for today's deep dive into Phillips 66.
Okay.
We've barely scratched the surface, but hopefully this is giving you a better understanding of their current position and the challenges and opportunities that lie ahead.
Yeah, I think it's a really interesting story.
It is.
And it's one that we'll be following closely.
Yeah, for sure. And for our listeners out there, remember, the energy sector is constantly evolving.
It is.
And those who stay informed and adapt to change will be the ones who thrive in the long run.
Absolutely.
All right, so thanks for joining us on Talk Tickers, and be sure to tune in next time for another deep dive into the world of earnings calls.
Thanks, everyone.